particular session, we just review what's going on in the market and the sector, and based on that, we'll look for a couple of trades. We also examine economic drivers. The economic drivers today are as follows. China cut interest rates by 50 basis points in a somewhat surprising move from 10.5% to 10%. In terms of economic data, PMI manufacturing readings out of the major European countries topped estimates, but they still remain in contraction territory. Here in the US, mortgage applications increased 3.7% week over week. And finally, we got the PMI from S&P Global today. Both services and manufacturing for the United States were in expansion territories. All right, let's take a look at the market. All right, let's put up the S&P 500 here. All right, so we have we had this little range going on here. We've obviously broken out of the range, okay? And what we're going to do here is look at our secondary indicators. Obviously, price is telling you we're making highs. Let's look at some of the secondary indicators, though, that we often look at. The first one is our signal based on the VIX. All right. So I'm going to pull that layout up. Again, I'll explain this when I pull it up there. So the first one is the VIX. Okay, so how some technical traders use this particular indicator set is as follows. What is it? Number one, it is a chart of the VIX in the upper pane with the S&P below in the same time frame. All right. What we look for is the change in slope of the upper Bollinger Band. Just to show you some ideas, when the slope starts going up, that means volatility over a longer period of time is picking up a little bit, and you can see the market goes down. When the slope goes down, means the longer term volatility could be falling, the market tends to go up, right? And you can see all of those falls here, market went up. Fell in here, market went up. So where are we now? Let's zoom in on the top of the VIX here and see what's going on. It is still sloping down. So this started right about here, which was the last one. And it still seems to be working. So longer term, based on this particular indicator, some technical traders would say the market is still maybe leaning a bit towards the bullish side. Okay, that is, we're going to do this again when we look at the NASDAQ. But for the NASDAQ, though, we don't look at the VIX, we look at the VXN, okay? But let's keep our attention, though, on the S&P. So I'm going to get back to our regular chart here. All right. So the next thing we look at, so that was positive, and we put up the SPX again. For many technical traders there. And what we're going to look at now is some of our market breadth indications. So I'm going to close this chart down, but I'm going to open up this one. All right. So this is a chart of the New York Stock Exchange composite. And what we have here to take a look at is the advance to decline line. And you know, the NYA still hasn't broken out. It's going kind of sideways. The advance to decline line is going sideways. What we look for is the McClellan oscillator signal. It is still a little bit below zero, but it has improved. All right. Now, some traders use the improvement as a potential trading signal. If you're not familiar with this, all it is, it's a momentum measure of the advance to decline line, okay? What it really does is simply apply the MACD formula to this data series in here, all right? So some traders, when we turn back up, might have gone and used that as a potential buy signal. Other traders actually do want to see this go back above zero. You see, the last time it did that, we had a pretty good run. It was right here, and it went until it faded here, and that was the last one. So that is improving, although it's given one signal, but it has not given both signals, right? All right. Then let's look at the longer term version, which is the McClellan summation index. So let me load that up. All right. So here, again, we see the momentum is waning just a little bit of the New York Stock Exchange because these bars are going down, but they're still above zero. All right. Some traders use just the change in the slope as a potential signal. Others just use a cross of the zero line. What this is, for those not familiar, is simply a running total of the McClellan oscillator values. So it's considered a positive influence on the market by some technical traders when it's above zero. It's considered a negative influence on the market when it drops below zero, as you can see here. Again, the way that some people take these signals, you can either go for the absolute cross or you can look for the turn. Okay, it's up to you which one. The turn is usually comes sooner, but some technical traders think you can also get whipsawed a little bit more with that. So I just thought I would show you that as well. All right. Now we are near highs. So what we need to look at is, do we have what are called split market signals? Again, for those not familiar, what a split market signal is, if we are at highs in the market, would you expect to see as many 52-week highs as 52-week lows if the market is near highs? You wouldn't expect that. So if you do begin to see that, that means the market might be splitting a little bit. And sometimes if that continues, that can be a warning sign. All right. The way we assess that is with an indicator called the Hindenburg-Omen. All right. So I'm going to pull that one up next. All right. So what this does, if you're not familiar, it's based on New York Stock Exchange data. And what it does is it simply compares the number of 52-week highs percent to the number of 52-week lows percent. If they're both over about 2.5% over a certain period of time, there's four inputs into this indicator. You'll get a flash. So we did have a flash on the 8th, but one flash is not enough. What you need is this. So we'll be watching to see if we get something like this soon or not. Okay, so this is, you got 5 of them in a course of several weeks. That is called a cluster, and the cluster, as you can see, often says there could be a little bit of weakness perhaps coming. Doesn't always work. No technical indicator always works, but it is certainly something that you can look at. All right, the next indicator that we look at when trying to figure out what's going on with the market is the seasonal pattern. So let's go do that next. We'll do this on the S&P 500. All right, so this is the seasonal pattern on the S&P 500. So let's see where we are now. We are at 125. So at least based on history, now I have to change this to make sure we get enough history, okay? So we need 20 years of data to make it more. Okay, so I changed that. And if you're unfamiliar how to generate a seasonal chart, just let me show you how to do that. All right, you go here to Style, and you go to Chart Mode. Standard is what you usually have. You want to change that to Seasonality. All right, the next thing you want to do is, because you can't see this line very well with 20 years of data, you need to amplify it. The way you amplify it is simply go up to the top of your chart, click on a little pattern thing there and change it to manual. And then you just pull down over the seasonal line and now it'll pop up. All right. So what do we see here for the SPX? We have, for the last 20 years, we're at 125. So at least seasonally speaking, this looks like have a little bit of an uptrend perhaps over the next few days. Again, seasonals don't work all the time either. But again, we just try to put as many pieces all right, of the puzzle together as we can. So what have we learned so far? We've learned that the VIX signal is leaning towards the bullish side. We have a breakout on price. The seasonals are a bit in our favor. The only little negative is that we haven't got the McClellan oscillator back above zero, but it has turned. So some technical traders using those inputs might lean towards the bullish side on the market. All right. All right. Let's take a look at the NASDAQ composite. I mean, the NDX, rather. The NDX is the NASDAQ 100. All right. It seems to be making an all-time high. There's generally, new highs are not bearish, generally. All right. Let us check out the McClellan oscillator. Remember, the McClellan oscillator we did here was on the New York Stock Exchange. We're going to have to modify it if we want to look at the NASDAQ composite. All right, so let's do that. So we'll put up the NASDAQ composite here. You can't do it on the NDX, but you can do it on the NASDAQ composite. And then what we're going to do is change the McClellan oscillator, and we're going to change what it's looking at. Okay, we don't want it to look at the New York Stock Exchange. We want it to look at the NASDAQ. And ditto on the summation index. All right, we're seeing the same pattern here as well. We're making highs. You can see the breadth is not making a new high, though, is it? Right? So that's why this is probably a little bit less than zero. So what we might be watching for as technical traders going forward is, will the breadth come in and support this over the next week or two? And we can look at that by looking at the advance to decline line, and we can get that by looking at the McClellan oscillator. And this is kind of weak actually down here, the McClellan summation index. Now the other indicator that I have here, pull it up, is this one. We also look at this one every week. All right. So the bottom line here is that, what is this? This is called the sector rotation model. It does not pick up sector rotation. That's a common fallacy. All right. What it's based on is it was developed by a Greek economist, and he took the view that when a market tends to be stronger, you tend to have the more aggressive sectors having a rate of change usually going up greater than the more defensive sectors. When the market is a little bit under pressure, that is reversed. So all this tells you is, what is the sector situation vis-a-vis rate of change going on? If it is above zero and climbing, it means that the more aggressive sectors are doing better, and it's a stronger signal. If it's negative, that means the reverse, and you can see that often led to a little decline there, right? So right now, it's generally going higher. So this particular model would suggest that are basically a positive, okay? All right. Let us look at the Russell. All right, now we do have a question, is the Russell lagging a bit negative for the overall market? Some technical traders do feel that often in a very aggressive up move, the small caps tend to lead. What I believe some traders are saying is going on now, though, is that small caps are typically very sensitive, or I should say more sensitive to interest rates. Interest rates have been, they've come down a little bit. Let's look at the 10-year right now. And you can see that it is strengthening a little bit. As a matter of fact, it's just closed above its 50-day moving average for the first time since last fall. All right. So anyway, bottom line is that is a bit of a negative for the Russell. Perhaps one way that will, um, maybe keep it a little bit under pressure. Okay. Now we have a question on the McClellan indicator. I don't think I colored it. I think that's the default. Let's just go look. All right. Pull this up. Yeah, so this plot sellers are automatically set. So as long as you just pull up the McClellan summation index, which is a pre-built study, it'll default to the colors there. That's the answer to that one. Okay. All right. Now let's go back to the SPX, because how do you know how far it might go when it's going to new highs? One way is, if it had been in a bit of a range like it is here, one way that some technical traders will suggest a interim target is by using what are called Fibonacci extensions. So let's try that. All right, so I'm just going to zoom in here, and I'm going to pull this down a little bit. And this is the last range it was in, so that's what we can use. So we're going to go here to our drawing tool, and we're going to go to the Fibonacci function right here, and we pull down on this, and potential levels, we've already taken out the 161% level. That is sometimes an interim target. When that is exceeded, some traders believe you've got an okay chance of going to the next level, which is the 261% extension, which on the S&P would be 49.4718. All right. Let's do that on the NASDAQ. And the Russell is not really doing it for us. Let's just look at the NASDAQ, though. Look at the NASDAQ 100. All right. So this had a bigger range. Let's see how it's doing vis-a-vis where it might get apart this. All right. So we'll change here. We're going to pull down here to here. All right. So once again, we have taken out the 161% extension. Okay. And then let's pull it down and just see where that 261 is. It's up here at 18,997. All right. So, of course, nothing works all the time, but some traders use this as a rough guide when things are making new highs. All right. All right. We have another question on Dow theory. All right. Let's take a look at that. For those not familiar with that, it looks at the relationship between the Dow Jones Industrials and the Dow Jones Transports. All right. So let us take a look at that. Let's see where the Dow Jones Industrials are. All right. So they are at highs, right? Let's go to a weekly chart. All right. So they're at highs, a little bit of a flag on the weekly chart here. So what we want to see is, are the transports making new highs along with the industrials? Let's see. No. Close. I mean, whoops. So this was a high a while ago, but we're not there yet. So you really can't say from a Dow theory perspective that we have confirmation right now. What Dow theorists would like to see is the transports making that new high along with the industrials. However, there's been modifications to Dow theory by some traders. What is the modification? The modification is that are the transports as important as they used to be when we were primarily a big manufacturing economy? The Dow theory feeling was that you've got to transport the products once you make them. So you make them with the industrials and you transport them with the transports. If one of those two legs of that stool start faltering, that could be a negative signal. Some traders are saying, well, with our current information-based economy, some traders for Dow theory now are using the semiconductors in lieu of the transports. So let's see if the semiconductors are making a new high. Yes. So in the modern version of Dow theory that some traders use, we are getting confirmation. So I just thought I would throw that out there. Okay. All right. Now, let us go ahead and take a look at sector action today. All right. So the first thing we can do is just see how we're doing year over year over the last year. So I'm going to pull up this chart. This is a sector chart, and this is wrong colored. I got to recolor this one. I can't seem to fix it so it sticks. I want it to match the. There we go. All right, so this is information technology, which is the clear leader. All right, this is communication services, and this one down here is consumer discretionary. But we are seeing a little bit of rotation, okay, into some other sectors, and we're going to take a look at that. But this chart will just show you how we're doing over the last year, what's leading and what's lagging. Now, let's take a look and see if we can pick up some rotation. Now, we have a question back on this chart. What moving averages are we using? Okay, so I have different ones that I look at. Generally, for longer term, I use longer ones, which would be the 100-day is this one, the 200-day is this one, and the 50 is this one. Okay, so those are kind of standard. For shorter term analysis, a lot of traders might use something like the 5, 10, and the 20, right? Shorter term as well. All right. But, for intermediate term, I think people use that other set, the 20, 50, and the 100, or the 20, 50, 200, or the 50, 100. I mean, I got them all. So right now we're looking at the 200, the 100, and the 50. All right. Let's see if we see any rotation at all. So let's go and open that up. All right. So for those not familiar with this, we look at this pretty much every week. These columns are the relative strength of the sectors versus the S&P 500 over different time frames. This is over the last quarter, 63 trading days, last 2 months, 42 days, last 1 month, last 2 weeks, last week. Okay. All right. So pretty much what I've been seeing here, and many traders have been seeing, is we just seem to have strength in all time frames, really, in information technology and communication services. What, though, has been getting a little bit stronger in here, okay, is let's look at the financials. So we were at, third here for the last quarter. Way down, sorry, flip me back. We were third here, third here, third here, first here, okay? So we've had okay strength, but the strength seems to be getting a little bit stronger, all right? Let's take a look at the financials chart. All right, so I have this linked to my chart with the same link icon here. We'll just check on the financial sector. All right, we'll get a better chart here. And what we notice on the financial sector is we have a little breakout from a flag. All right, that is kind of interesting, isn't it? So that makes you feel, if we were looking for a trade, might we look in financials? Well, we could. I mean, let's see if we get some stocks breaking out in financials. How are we going to do that? The way we're going to do that is we're going to go to the scan tool. And this is the scan that I've given you both codes for, both for the TD Ameritrade version of Thinkorswim and also for the Schwab version. I found a computer with the Thinkorswim version from TD Ameritrade. So on the scans that I've been doing in this class and the advanced charting class, I'm trying to replicate them for all of you that are still using the TD Ameritrade version of Thinkorswim. Okay, just going over conceptually what this does. All right, we're looking for stocks that have been uptrending and might be breaking out. So how are we getting the uptrend? We're just saying the 15-day moving average is greater than the 50-day moving average. We also had the momentum picking up over the last couple of weeks versus the last month. In other words, the RSI, which is a momentum indicator, looking back the last 10 days, shows more momentum than over the last 30 days. The volume over the last week is greater than the average volume over the last month. So maybe we're getting some volume moving in there, and the stock is making a 20-day high. All right. So now, how are we going to look into? So we have a question. How do we see the scans if you have the older version of Thinkorswim for TD Ameritrade? So you get the scan at the top, the code, and what you do is you simply go here to setup, open shared items, and put that one that I labeled for the TD Ameritrade scan. You just put that URL in here, and then you can import it. Okay. All right. What we want to do, though, let us look at S&P 500 financial stocks and see if we see any breakouts. All right. So to do that, we are going to scan in not the NASDAQ 100, because remember, the NASDAQ 100 is the biggest stocks on the NASDAQ, excluding financials, so we wouldn't get any. All right. So we're going to go here to the S&P 500. But we want to narrow it down to the financial sector. We could also do it by industries. We're going to do that in technology. We're actually going to do a scan in an industry and technology. But for this one, we're just going to do financials just to show you how to do a sector scan here. So we're going to intersect with by industry. All right. And we said financials might be looking promising. So we could pick a specific one, but let's just select all because we don't necessarily know where the strength is. All right. And now we're going to scan there. All right. We didn't get that many, which is good. We don't have to look at so many charts. All right. Well, let's look at a couple of these. We shall look at three of them. We're going to look at the AMP. We're going to look at Berkshire. And we're going to look at CNF and see what we get. Okay. All right. So let's go over to the chart. I'm going to pull up a chart here. All right. And the first one we're going to look at is AMP. Are we getting a breakout on AMP? Why, yes. Well, yes, it kind of looks like the sector, doesn't it? It kind of looks like a breakout of a flag. Interesting, right? Okay, so again, what can we do for this? Well, number one, is it a flag? Well, it's in here 1, 2, 3, 4, 5. Yeah, so flags are 1 week to 3 weeks. So we've got 5 trading days. So it is a flag by that definition. All right, 2 ways we can set targets on this one. All right, and let's see if they line up. The first is what we would call the flagpole. Where did we start going up? Okay, and this is a weekly breakout. Let's look at the daily breakout too. There's a daily breakout. Okay. All right. So that's a good point there from BJ too. If you get the breakout on the weekly chart, that's a new set of traders. All right, that use that longer term time frame that might be interested in as well. So thank you for that, BJ. Yes, absolutely. So where is the flag here? All right. So it's more than a flag on the daily chart. All right. It's not a flag on the daily chart because it's more than 3 weeks. What it is a rectangular consolidation. It is a flag on the weekly chart, as I said. All right. Okay. So let us go and take a look at where the potential target might be here. There's 2 ways we can figure that out. One is the height of the range. And we could put that up. So the way we could do that is simply go to our drawing tool here and let's get a trend line. And then we're going to duplicate that and we're just going to pull it up. All right, so there would be potentially one target. All right, let's see where that is. Uh, 403. Now let's do the Fibonacci thing that we went over and see if there's any confluence between that. All right, so now we'll change this to Fibonacci's here. All right. So, kind of interesting to me is that we actually, let's zoom in here more. Whoops. Oop, didn't want to do that. Didn't want to do that either. All right, let's zoom in here. All right, so we're getting close to the 161 point retracement or extension, I should say. And this would be the 100%, right? Because this is the width of the range. So if we can take this one out, now some traders might take a small profit there, perhaps, or others might just to see if we go all the way up. Yes, and we have a question. We have earnings, so we need to keep that into account too. So they actually announced yesterday, right? So we're past that. All right. I think it was yesterday, right? After oops, take that off. Okay, let's get my cursor back here. Yeah, earnings on 124 after the market. So that was yesterday. Today, the 24th is today. I thought today was the 25th. Sorry about that. You're right. Absolutely then. Yeah, so that one, you take your chances, right, with earnings. All right. Let's take a look at another couple here. Let's see if they have earnings too. Let's look at CNF. That's the issue, of course, with an earnings season. You're going to have this a lot, right? All right, this one has also broken out, although it's not near a high, but you can see we have a nice range that it just broke out of. Let me draw that in there. And this one we wouldn't touch because it's a $2 stock. And let's look at Berkshire. Berkshire is also breaking out here. Let's see if we can set some targets on that one. So, I would say, and some technical traders might say, where is the bottom of the range here? You got this low, and it seems to be coincident with all of these guys in here. So let's draw that in there. Okay. And then we have this range, and then number one, we could extend the range, or we could do a Fibonacci on this one as well to set a target. Okay. Now, let's also, to make sure we give everybody the earnings on this one, and I actually have a little study here that one of my people that watch these a lot, who's an excellent coder, I want to show you this little trick he gave me. Okay, we did look at CNF and it was $2, so we decided that we're not going to do that one. All right. We're going to take a look this time at, just to get the earnings, I want to show you something here that he did. This is pretty cool. It'll put the earnings right up there at the top. Right. So earnings on this are 2.7. So we still have a little time on Berkshire. All right. All right. So maybe that's a potential one. Let's do another scan though, and let's go ahead and look in technology, but technology is such a big sector that maybe we can look for a subsector. All right, let's try that. So let's go here to scan again. This time, let's in the S&P 500. This time, let's do it by information technology, and let's just do a subsector, maybe software. So that's how you can get down to, and you can also get down to the sub-industry level. All right. Okay. So let's go ahead and select all software, S&P 500, and let's scan. All right. Well, we know what's going on with Microsoft. That's just making a new high. That's just been climbing. It's not really a breakout as much as just it's continuing to make 20-day highs. Okay. It broke out a while ago, right? It broke out a week and a half ago. All right. Of that list, though, Fortinet is on there. Fortinet has been all over the place, but now we have a breakout of resistance on Fortinet here. Let's zoom in. All right. Now, this one, it might be a little bit harder to set a target because, I guess you could say there's a range here to here. All right. Because we had this as support. It acted as support in here, support in here. This high looks like resistance. So if you use this as a range, we could do those same target setting situation. Okay. So we could either just do a Fibonacci extension or we could do a just the width of the range. And again, earnings on this one, 2.6. All right. So we have a little time. All right. All right. So since maybe this one will play catch up, you never know. How might we trade this one? Well, let's see if we can get us. Let's see where the range would take us. I got to duplicate it again. Come on. I did the wrong one. Let's get rid of that. All right, then we're going to duplicate this one. There we go. All right, so that puts it up at about 75. All right, now here is the 200-day moving average. Notice how it kind of acted in there as resistance, and then it finally popped through. Now it popped through this resistance, okay? So if we wanted to do this one, some traders might put a stop to give it a little room under the 200-day. So you'd have to break several areas, okay? You'd have to break the resistance and you have to break the 200-day. So there you'd be risking about, this is 63, it's at 66, so roughly 3 points to make roughly 66 to 75. That's what, 9? So that has some risk to reward in it. All right. So maybe we can do that. So let's try it, knowing that we'll have to check it before earnings. But so we would do that buy with a custom, and we could do it with a bracket. We have the 75 is our target. We'll put a stop at 63. All right. So let us do that. All right. This stock is trading at $66. We try to do about 5,000. So it'd be like 90 shares. All right. So it's breaking out. Maybe we just buy it at the market. And our target would be around, we said around 75. Again, no guarantees that we'll make that. It's called the measured move methodology. Doesn't always work. That should be good till cancel. And our stop, we set around 63. If you're doing 63, I'd probably do it at least some traders might not do it right at a round number, maybe like 62.95. All right, we make that good till cancel. Confirm and send. All right. So we're not, hang on there. No, we don't want to sell it. I must have hit sell. We'll have to delete this. I would do it a buy custom. Yeah, okay. Said 90 shares. All right. Limit, we're buying it at the market. 75 is our potential target. And 63 is our potential stop. We said 62.95. You should be good till canceled. All right, so here's our order. We're going to buy 90 shares of Fortinet. All right. At the market, do we know what price we're going to get? No. Okay. But, maybe around 66.25 or something like that. And then we are going to sell this. If it goes up to a potential target of 75, so at a limit price of 75, if it gets up to 75, we got a chance to sell it. And then if it drops to 62.95, we have a market order in to sell it. So will we get, that? We don't know, right? It's a market order. So we don't know the activation price. But let's go ahead and place that. And now we have a little trade in Fortinet. All right. So there you go. Thank you very much for your kind attention. I will put both links for the scan for both TD Ameritrade, Thinkorswim, and Schwab in the notes for the class. I'll also put the earnings label in there. I don't know if that's going to work for TDA because I didn't develop it. I had one of our smart clients develop it. Okay. But I'll put it in there, what I have anyway. And thank you for your kind attention, everybody, and have the nice rest of your trading day. Take care.